All right, guys, we are live and happy New Year. 2024 is here and we're ready to thrive, man. Isaac, how you doing this new year, man?
I'm doing good. Just hanging, enjoying the new year.
That's all you can do pretty much, man. That's all you can do. Cool. So we'll go ahead and kind of get started. So this episode, guys, we're going to be giving you guys our 2024 market outlook. We're going to talk about crypto. We're going to talk about stocks, maybe a little housing, maybe a little bonds, maybe a little bit of the Fed. We're just going to we're going to let you peer into our proverbial crystal ball. No one has a crystal ball, but, into our thesis as to how we think markets are going to shake out this year. JT is quieting his kids right now, so he's going to jump on here and interrupt us at some point in time and, give us his opinion as well. So be ready for that. So, yeah, did you want me to start, Isaac, or did you want to start?
No, you go for it.
All right, cool. All right, guys. So in my opinion, I think that 2024 is going to be bearish for stocks, but very bullish for crypto. And I'll kind of give you my thesis. I'm going through these charts. So as always, we like to start with the Fed. You see that the central bank balance sheet has just been on a decline. They're offloading bonds from the balance sheet. And we finally had we have a big cross of the 200-day in the actual balance sheet amount. We were at 8.9 trillion. Now we're down to 7.6. So roughly 2 trillion of assets dumped onto the market. So this is going to affect liquidity, which is a big reason why I think that stocks have further down to go and crypto has up to go. If we look at the M2 money supply, you can see that we're still printing out money. I heard Joe Biden supposedly gave his last couple $100 million to Ukraine. Will it be the last? Who knows? If we look at gold, we can see it's kind of still consolidating around all-time highs. If we look at the S&P, it's pretty much at all-time highs again. If you look at the Dow, it's at all-time highs, brand new all-time highs. This is crazy in this high interest rate environment. And then you look at the NASDAQ, you are, still in what I think is a relief rally. And if you look at Apple, it's still hovering around all-time high areas or levels, and they're still in the midst of the largest stock buyback program in history. And you have to remember, Apple holds up most of the entire stock market. I think as we go into 2024, Apple can't continue to trade at this high price to earnings ratio. And, you hear about all the layoffs in tech. So Apple makes up most of the weight in the S&P. So as they start to come down, I think it's going to bring everything else down with it in TradFi. You got Google. All the charts pretty much look the same. Facebook, like that has to come down. Like that is insane. Good for you if you bought down here. I have a picture here that I wanted to show you guys that I thought was pretty insane. So guys, Lynn Alden is someone I recommend. If you're serious about finance, I would definitely recommend you listen to her. I try to listen to all her stuff. She's a very smart woman. So she posted this on Twitter that I thought was pretty interesting a couple of days ago. And basically 92.5%, guys, pretty much all of the equities are held by the top 10 wealthiest Americans. And this is a record high concentration. So you look at this chart here, even in 2008, around 2008, it was around 85%. Now we're around 95. So basically what this is saying is that all it takes is a few people to determine I'm not so bullish on stocks anymore, and they start selling. And to be honest, I wouldn't be surprised what's happening with the BlackRock ETF and everything in crypto, that some of that money starts to make its way in crypto. Let's look at some crypto charts now. The deadline to make a decision on the BlackRock ETF is on the 10th, which is 2 days from now. It might be a day from whenever you're watching it. And like we've been saying for the past year, if this gets approved, when and if they get approved, because it's over 10 applications. And I think the SEC, in an effort to not be biased, is going to approve multiple ones so that they don't look like they're just in the bed with BlackRock, even though they are. I think it's going to be multiple ETFs that get approved. It's going to be a lot of Bitcoin that has to get bought up just to be able to fill orders. And then we have the Bitcoin halving happening in April. Not only that, I just showed you guys all of the stock market charts, right? And how they're pretty much, most of them are at all-time high levels. Well, the stock market hasn't corrected how we've seen in a traditional bear market. Another thing, the Fed, people think that we're going to see 3 rate hikes this year. And like I showed you guys this picture as well, every time we see a bottom in a market is always once the Federal Reserve pivots and they go to lower interest rates. And they go to lower interest rates because they realize something in the economy is broken. A lot of people think like, oh, they'll lower interest rates, the cost of capital will be cheap, people will go borrow money, it'll make his way back into assets, the party's back on. But it's kind of like a rubber band. Things have to capitulate first before that happens. So I still think that whether if the BlackRock ETFs get approved or not, I still think we have one more leg down, because you see this, like this needs like a reset. We'll probably come back down to 35, maybe even 40K before we start going back up. But like I said, crypto's already dropped. Like, let me just measure this. So while the stock market dropped and is pretty much back to all-time highs, we saw Bitcoin, not just crypto, we saw Bitcoin drop 77%. If the stock market goes into a recession, I think a lot of people are going to sell stocks, and I think that money is going to find its way into the crypto market. Why? So now here we are looking at the entire crypto market cap, and here we are at the resistance of pretty much 1.7 trillion. I think we'll probably retest that and come back down to 1.4 trillion, maybe 1.2 trillion before we start to make our way back up. But at the peak, the market cap for crypto was only 3 trillion. Right now, it's 1.6 trillion. That's less than 0.5% of the entire world's money. So those wealthy people who have most of their money concentrated in stocks, like you saw in there, 94 point something percent, it's a drop in the bucket to get crypto to go up to a 3, 4, 5, $6 trillion market cap. If the stock markets capitulate and we have a BlackRock ETF, we have the halving, and then we already seen the crypto market do most of its corrections. Just to measure it here, the crypto market, the whole crypto market dropped 75%. If we see a recession, we might see crypto come back down to inside of these levels, but I don't think it's going to go much lower than this, especially with all the things that institutions are like doing to get in. You're seeing reports come out from Goldman Sachs and Morgan Stanley. They're all thinking that 2024 is going to be a recovery year for crypto. And then lastly, I saw this on Twitter somewhere, and this basically is like a chart that predicts like hard times, recovery times, and good times to buy like stocks and assets, period. This was accurate on the Great Depression. It was accurate on World War II. I think World War I, the dot-com bubble, COVID, which was 2019. So here we are in 2023. 2023 was a bottom year. So now, according to this chart, 2024 should be the year of recovery, and I think that 2025 is going to be like blow off top for crypto. I'm not sure about stocks, but I thought this chart was interesting.
So now's the time to be in the market.
Pretty much now's the time.
Do you believe this chart though?
I take
like
everything.
How much?
Well, I can't argue how accurate. Let me stop presenting.
Whenever it's that black and white, you have to take it with like 2 or 3 grains of salt.
Yeah, but I can't argue at how accurate it's been. So now I'm just like, okay, that's pretty interesting. Obviously, I'm still looking at other things way more, but I just think it's crazy how accurate it was in predicting all those things to the T, pretty much.
Well, did it predict it, or did it just extrapolate based on past data? Because that's what it looks like.
Yeah, because you can.
And everybody's a genius in hindsight.
Both of you guys are talking.
Let me back up. Let me back up. First off, what's up, guys? Isaac, what's going on, man?
How's it going,
Happy New Year, bro.
Yeah, happy New Year. We told each other Happy New Year like 4 times during 4 different meetings.
Not on here. Not on here. No, I'm just playing.
Sure, the audience didn't know.
Happy New Year, man. I'm chilling down here in Puerto Rico at the moment. Nice. No, I'm in Arizona. But
also nice. That's a good spot.
Yeah, no, it's a good day out here. It's a good day. I'm on my balcony, so you might hear my kids crying. But yeah, man.
Yeah, so while you're here, JT, I just finished like my whole thesis, and I know you only have like maybe a second here.
Yeah.
What do you think? What do you think is going to happen in 2024? Stocks, bonds, crypto, housing, like whatever you want to chat about, man. Like, what's your?
So I'll be able to stay a little longer than anticipated. This is actually a really great spot.
By the way, I wanted to get him out of here. Like, no,
but no, where would I start? So I guess the biggest theme, whether it's alternative media or mainstream media lately, and I would say lately the past like week, maybe 3-4 days, is Fed rate cuts. Because as you know, at the last FOMC meeting, the Fed came out and projected 3 rate cuts next year, even though the market said, you know what, 3, we're going to head and price in 6 or expect 6. which is insane. And I don't think that's going to happen. But anyway, and so that's been one of the bigger themes. And so I guess I would start by what would be the two reasons that the Federal Reserve cuts rates? Well, the first one, you probably heard it already, and it's the most simple in that, well, obviously something breaks, and that's their response. And so you could infer from the fact that they forecasted 3 rate cuts that they're projecting something to break, which would force them to cut rates and start easing to bring things back into a balance.
The Fed is projecting 3 rate cuts?
Yes.
By when, do you know, or just throughout the whole year?
Basically through the whole year, but to start in about March.
Okay.
Yeah.
Do you have any idea as to what could break first, or what they're thinking is going to break first, or no?
So in my opinion, it could be the labor market. The labor market has been eerily stagnant. The unemployment rate remains unchanged, even though they expected it to go up. And so it's been like eerily stagnant. So it has to move in one direction. It's not just going to stand still. And that's effectively what it's been doing, because there's a good balance between supply and demand, aka job openings and potential labor. And so that balance still exists. But if anything, I think it could be the labor market. And the other reason why they will cut rates is to simply bring real rates down from a less, or from a more restrictive level, which we are now. If inflation actually is sustained at around 3%, let's just say 3% for easy numbers. If it stays around 3% and we're sitting at 5.25% on the Fed funds rate, we're at 2.25% in terms of the real rate, which is actually really restrictive. And so because inflation has come down, if they're expecting inflation to stay where it is, which I actually don't know at this point, so I don't have an opinion on the direction of inflation here in the short term. But if the Federal Reserve is expecting inflation to stay sustained at around 3%, well, that will warrant 3 rate cuts, which would bring us to around 3 rate cuts from 425, basically 375, basically. That's where that will put us. And so that would be actually really loose. So that would be less than 1% on the real rate. And so that would be the other reason they lower rates. So for those 2 reasons, I can see now, because I believe the recession was due. I was one of those guys who was hard in a recession, and obviously I've been super wrong on that. But at this point, my initial thought when he came out and made the comment about the 3 rate cuts is that, okay, we're definitely getting a recession. But then, I thought about the inflation in the real rate on the Fed funds rate. So I'm like, okay, that makes sense. So we may actually be able to avoid a recession, which would shoot the stock market to another level, because we avoid a recession, obviously.
That'd be crazy.
Yeah, that would be insane. And I also remember making an argument about bond yields and how, they could potentially move higher unless demand came in hard enough to where it pushed yields back down to, just a lower point. And I think I was actually wrong on that as well, but it still has time to play out. And if they were to cut rates, or let's say if we cut rates just because of inflation and we avoid a recession, well, that would actually put downward pressure on bond prices, which obviously means bond yields will move higher again. And now you have that competition that starts to brew between stocks and bonds, which if you're generating 5% on bonds, even in a good time, certain investors who have billions of dollars in pension funds and all these money market funds, that's their primary buy right there. They're going to buy it no matter what, but they're going to eat it up at 5% yields, because now they lock in a yield and they're going to have appreciation when it comes to maturity. And so in the end of that, I can see just that pushing us into some type of financial asset recession, just because the action that we'll see in bond yields moving forward potentially. And so we're still at a point where we could paint multiple scenarios. It's just the only difference now is not 4, it's just 2, pretty much. And so that's like a synopsis on it.
What do you see housing doing this year?
Housing's just going to keep going up, to keep it simple. I've been saying the same thing for the longest. It's really a supply problem. That's literally the issue in housing. No matter what type of data we see, even in November, prices went up 4.8%, according to Case-Shiller, which is obviously our most notable housing aggregator when it comes to prices. So the Case-Shiller index rose 4.8% year over year. So prices are still going up pretty heavily, even though in the later half of 2023, we saw some softening, but there was no going backwards. It just softened a little bit, but we've continued on that uptrend. just because demand, people are tired of waiting. Demand is picked back up in the face of supply really staying somewhat the same. And all the supply is really coming from new homes, which is why we saw a drop in new home sales, but existing home sales are pretty consistently just going up and becoming more expensive. And a lot of people have been blaming it on the mortgage rate lock-in over the past year or whatnot. But to answer your question definitively, home prices are going to keep rising. I think even if we got a recession, the housing market will be inoculated from it in a way. We may see some softening, but we're not going backwards. Simple as that. And by the way, here's an interesting stat. You need to make in America now $110,000 per year to avoid paying 30% or more for like housing expenses. No, for your mortgage.
Yeah.
That's pretty insane, actually. So we're still at the most unaffordable point in housing history, but it doesn't seem to matter because inflation, in a way, is just making the rich richer. And so you still have a lot of flexibility in this economy, which is why we haven't seen weakening in the consumer. And as long as we don't see weakening in the consumer, the housing market, once again, should keep moving up. And then wages have been rising pretty respectively. You can argue now that they're rising faster than inflation. And so, I mean, we're sitting at a pretty good point right now. Just currently, if you want to take a snapshot of where we currently are, we look like a super healthy economy, and the Fed knows exactly what they're doing. That's what it looks like. And I'm not saying it's not like that or it is, it's just what it looks like. And also another interesting point, and I'll end it off here, is that, man, we're about to enter a time where we're doing QT and QE at the same time. Have you guys thought about that?
Yeah, it's also a time where it's like stock markets can be high, but bond yields can be high. And normally that's like inverse as well. It's kind of crazy.
Yeah. So the Federal Reserve has projected 3 rate cuts. So they're going to be cutting rates unless they don't cut rates, because sometimes just them saying is good enough for the markets, right? But we'll see. If they actually cut rates, they'll be cutting at the same time they're engaging in balance sheet runoff, which means they're doing balance sheet QT while doing interest rate QE. And so I heard somebody say it the other day. Throughout history, it's not normal for the Federal Reserve to press on the gas and the brakes at the same time. That's exactly the point we're going into right now. And so it's just interesting times, man. Interesting times.
No, that is pretty interesting. Isaac, what's your thoughts on 2024, man?
General thoughts. I think I concur with a lot of what JT said. Yeah, I think generally speaking, I think we have kind of a coin flip when it comes to whether there's going to be a recession or not. And this is what most like predictive models are kind of putting out. You have Statista, 51.84% chance of a recession. The National Association for Business Economics, they literally say 50% chance. A lot of different groups have been kind of predicting, like New York Fed, which was that they from the Statista, they're the ones that said it's like a 51.8. Everybody's kind of saying it's like a coin flip. I kind of concur with that. I think that if rates are being lowered to match inflation, that's a good reason why rates could be lowered without it having to be like a system break, which a lot of people would be like, oh, well, rates won't go lower unless the system breaks. Well, yeah, I think that JT did a good job pointing out why that's not always the case. You could lower rates without a recession occurring. I think that I could see a downturn though. So even if there's not a recession, I could see this be like a bearish market. Mostly because people in the market are pricing in much more rate cuts than we're probably going to see. You know, I think that the last like betting odds is like 5.5 rate cuts for 2024. So if we're going to only see like 3, I mean, that's going to be, that's going to need to get priced in eventually. So I think people are being a little too optimistic right now going into the year, and we could see a correction. Also, like high rates are pretty normal throughout American history. I believe the rates between 1971 and 2023 on average were 5.42%. So it's like some people mentally, I think they think we're going to go back to like 0% rates like we've had forever. And I just don't think it's going to happen. I don't think it's been fully priced in mentally yet. into people's minds that we're probably not going to see free money for the foreseeable future, and definitely not this next year. So I think with all of that, we could see a recession, maybe not see a recession, but I think no matter what, we'll probably see another downturn in the market. My prediction would be that crypto would probably follow equities. It would probably also drop too, just because it's a very risk-on asset. I don't know though. I'm kind of steering clear personally, just because I do think there will be another good opportunity to enter the market maybe the next few months here.
Agreed. And on the crypto side, it's funny. I would agree 100% that I think is gonna. I would disagree. I mean, that it will follow equities only if the ETFs weren't on the table. But now that they're on the table, I think it would just make it, the correlation would just be higher.
You mean
closer to that equilibrium when it comes to equities because of the ETF products. And if everybody is like, everyone's thinking we're about to get this approval on Wednesday and they're about to start trading on Thursday, basically. Like, that's what the sentiment is. And so, the big question is it a buy the rumor and sell the news? Or is it the buy the rumor, buy the news? What is it? What's going to happen? But yes, I agree with the overall sentiment that is going to be correlated more with equities going forward. And, that liquidity correlation is still, in terms of overall liquidity, still very heavy as well. And so if we start to get more liquidity in the short term, Bitcoin should keep going up from here as it's been in the past couple of weeks.
What are you guys doing for your portfolios right now? Or what moves are you guys thinking of making, given your opinions on what could happen this year? I guess I can start. In terms of stocks, you guys know I'm not a really big, most of my wealth is in crypto. Only stock I'm buying right now is in Coinbase. I briefly talked about why I feel like they're super undervalued. They're building a global perp dex. Since exchanges make a lot of money, they already have their Coinbase wallet. When the bull market does come back, I think Coinbase on their balance sheet on their last earnings call, they had like 136 billion. People are mad that they're not investing more money into the business. That's how much money they have. They have their Coinbase chain, base chain on Optimism. And if you look at Binance Smart Chain, BNB is one of the highest market caps in crypto. So you can see, you have proof that the model of having an exchange first and then having a chain later, even though Base's chain is a layer 2 versus BNB being a layer 1, that model works. So they have their base chain, which they'll make fees from. They own part of Circle. Stablecoins is the best business model in all of crypto, because once you go and purchase a stable coin on Coinbase, they take your dollar and they invest into short-term treasuries and they don't pass on that yield. And Coinbase is the custodian for pretty much all of the applications for a BlackRock ETF. So Coinbase is like BDE right now. So in terms of stocks, that's what I'm buying. Crypto, like JT was saying, it's a toss-up. In my opinion, I think that this could be the event where in the short term, you'll get what I mean here. Like, I feel like when equities drop, I feel like crypto will drop, but I feel like it will recover way faster because of the ETF and just because it's already had a 70-80% correction already. So I feel like this could be the thing where in the short to mid-term, crypto and equities are kind of uncorrelated just because crypto already went through like the ringer first. So what I'm doing is still yield farming. If you want to learn how to do that like a professional and be able to deploy the same strategies that market makers use in traditional finance, visit knowitoutoutside.xyz or click the link in the description and book a free strategy session with one of our team members. We're gonna get to know you and ultimately see if this is a good fit for us to have you in our program. If not, we're helping to answer any questions and point you in the right direction. However, going back to what I was saying, I'm still yield farming. I still have a few stink bids because I do feel like altcoins are gonna drop. I'm not sure about Bitcoin as much, but I do feel like altcoins are going to see a correction for sure. But I'm mainly looking at real world asset protocols and just trying to position my portfolio to where I feel like the next big narratives are going to be. And I feel like that's GameFi, Bitcoin layer 2, so like stacks, and real world asset protocols. So that's what I'm doing with my portfolio. What are you guys doing with yours?
I mean, as the kind of more boring risk off person, I'm actually locking in a CD at the interest rate.
Hey, that's good, man. That's smart.
Not bad.
Like
yeah,
it.
I'd like
This
to,
literally
the
proves
good-
like this shows the different types of investors in real time. I'm like,
Seriously.
I'm gonna get that, that above 5% interest on a yearly CD. Ooh, baby, I know. I think that's not what I do with all my money. I am putting some aside. I was getting kind of made fun of a bit by the fiance for that because she's like, "Weren't you the big crypto guy? With all the crypto yield farming and stuff?" And it's just like, "What are you doing getting a CD?" And I'm like, "Well, no, it's just how it is. I can't deny. I think rates are going to go down. I want to get in now. Get in while it's hot." So, yeah, I'm probably going to do that. I'm also probably going to move some of my funds from my savings into Bitcoin, actually, in maybe after the next downturn. I'm probably going to deploy quite a bit into Bitcoin, and no leverage or anything, but just spot long it basically. But I predict the downturn is coming, so I'm waiting to deploy some
I
of
mean,
that.
Do you have a
both
certain
of those.
price where you think it'll go?
I can look at TradingView and give you my price prediction if JT wants to go first. Yeah, 'cause I'm pretty good at citing these prices where I want to enter.
I think that's a great position to be in, though. Locking in a CD, locking in the current interest rate. That's smart for one. On the flip side, just simply going long Bitcoin. You can't go wrong with that. So that's actually one of mine too. So just going long Bitcoin, keep DCA in there. I'm going to agree with Vince in terms of the RWA. It is the next play in DeFi. And when I say play, I mean trend that will eventually become somewhat of the norm. It would only be a trend at first. Basically, 60% of the project that you guys see us break down in terms of RWA world, I would probably have a position in it. And then, working with Vince actually more on the yield farming side, just so I'm just more prepared. Because you guys know, part of what I do on a daily basis is wholesale real estate as well. So I'm always just dealing in real estate every day. So that's how I make most of my money. And so, yeah, I'll start yield farming as well, but I haven't really started there yet. But that's going to be a good thing for me. And another thing that I'm looking at in terms of the stock market is REITs. And Vince, I brought this up to you a couple of weeks ago. Just because with the Fed cutting rates, historically, REITs do, obviously, for obvious reasons, really well in an easing environment. And then to be more specific, I actually brought this up, Ventas. It's a senior housing REIT. And that, in addition to an easing environment, we have demographics on our side as well. In terms of pretty much by 2030, all baby boomers are going to be over the age of 65. And so that's the largest generation that we have. And so you can imagine that senior housing is going to do really well. And then there was even some opportunity in office REITs as well, but you got to look at very good ones like Boston Properties and the likes of those, you know what I mean? And new home builders as well, such as Toll Brothers, DR Horton, because they're going to do really well in the easing environment. So that's on the REIT side. I agree with the Coinbase sentiment as well. I'm really bullish on Coinbase. Just honestly, if I strip Coinbase of everything and I base their value on being the custodian for all these ETFs, that alone would be a great bullish case. And so I'm bullish on Coinbase. I'm sorry, guys. I'm low-key shivering. It's a little cold out here. I thought it was way warmer than it is. Jesus. So yeah, in addition to that, of course, I'll always be buying and selling real estate just consistently, no matter what. And yeah, guys, I may have a big announcement coming up. I may never announce it, but I also may announce it. So we'll see. That's all I'm gonna say. Oh man. But yeah, that's pretty much what I'm doing right now and certain things that I'm looking at.
Nice. Isaac, did you want to share your trading view chart?
So if you can see, we are here.
Looks weird seeing a white chart. Mine's is black. That's
guys
nothing
see
to
black?
do with rates. That's funny.
Oh, for me, it has everything to do with it. I'm just joking. Joking.
I just don't know how to change it. Is there a way to change it to black?
Yeah.
Oh, dark mode. Yo.
So much better on the eyes, bro.
It really
Oh
is.
my gosh, yeah. Well, my eyes have been like killing me lately, and maybe that's
Yeah.
why.
Bro, you can. It's a dark mode on Google Docs too. Like all my Google Docs are black.
Are you kidding me?
Yeah,
Even
it,
my
gotta
Notion is
change
black.
it helps so much, especially when you're up late working. Your eyes just like, oh.
Yeah. Well, I just bought some blue light glasses for that reason, because I'm like, my eyes are getting strained, having to do all this shit.
Yeah.
Yeah, looking at this map, it looks like there's a big curve here, and it's going up, and I think it's probably going to go down somewhere in this area. That has
Anyway, so
hikers?
looking at that chart, so I was actually looking at the Bitcoin chart the other day, and is that like a key level at that? What is it? 48? That 48,000 you talk. So in my mind, if it sustains above, if we could remain here for the next well, I guess the ETFs are about to get approved. So fuck, that kind of changes.
Yeah, but that could be a sell the news.
That's true. I guess look, on the ETF day, if we don't, let's say close above, Bitcoin never closes, close above 48, whatever that number is, 48,000, whatever.
Yeah.
If we don't close above that, it's probably a sell the news.
I think it's going to be a sell the news because I think we're so overbought right now, and that's just my gut feeling.
Can you pull it back up actually, and then
Sure,
do you have the RSI on there? All right. So to explain the RSI, if you want to kind of scroll down there so people can follow. So the RSI is an indicator telling you if an asset is overbought or oversold, to keep it simple. Now, if it's at 30, that's basically oversold. If it's at 70 or above, it's overbought. As you can see now, we're at 72. And so Bitcoin actually is overbought. And so if we're only looking at the RSI, which is not really a good idea, by the way, but if we're only looking at the RSI, the relative strength index, we would say Bitcoin is overbought. And at this point, because we're at 72, we're technically, by technical analysis, overdue for a sell-off. But we shall see. So it may be, because this looks like, if I'm looking at the chart, knowing the ETF still has 2 days to be approved, this is definitely bought the rumor. That's what happened. We bought the rumor, and man, is it going to be a sell the news or is it going to be a buy the news? Kathy Wood says she thinks she's going to be a buy the news. But Kathy Wood, I like her, but
she's been wrong.
She's notoriously wrong, except for her long-term things, and just because we can't verify them yet. And so we shall see. I think it's also going to be a sell the news, by the way.
I think if it doesn't get approved, definitely sell the news, 100%.
What's the odds that it doesn't get approved?
I don't know. If it does get approved, it's like,
Isaac said it's going to 0.
if it does get
It'll
approved,
go back up then after though.
if it does get approved, man, I can see it being by the news. I can see it. I'm not saying it will be. Just because like the custodians are gonna have to buy Bitcoin, people are gonna know that. It's just hard for me to see that if it gets approved, it's gonna drop. Like, I don't know. This is an interesting thing.
Bro, if the SEC denies them, they're gonna get sued by like 9 different people.
Oh, the FT, yeah, they're not going to deny them.
That's what I'm saying. They're literally gonna get.
It's so crazy that we came to this sentiment.
To this sentiment, well, that's going to drop to 0.
Oh, the SEC is not gonna deny them. Like,
oh yeah, I didn't. Well, I mean,
that's
there's
so
too
crazy.
much money behind it.
No,
right?
I agree with you, but it's just crazy that this is where we are now, because like months and years back, people are like, yeah, I don't know. But now
it took the Winklevoss twins 4 years to get denied when they did it back in like 2012 or 13 or something like that.
They were just way too early.
Yeah.
I think this is the time. I mean, it's been institutionalized. It's being institutionalized. They've also like killed off a lot of the, non-institutional actors in the space. We've seen a lot of the independent crypto native groups getting kind of weeded off, thrown in jail, losing tons of assets. So I think this is the time for the institutions to step in, take it over. And I don't really see there being much regulatory resistance in the way of that, right?
Yeah, I agree. And I've been saying this for years, bro. Like at the end of it all, like we're going to be more centralized in terms of crypto. We're going to be more centralized than any Bitcoin maxi could ever tolerate.
Oh yeah, Bitcoin maxis are, writhing their graves right now. It's not good.
Yeah, and that is an unfortunate fact, but I believe that DeFi and like just DeFi in general, let's just keep it general. It will be, and I brought this up to you as well, Vince, the other day, that it's going to be like this new financial plumbing at some point. At some point, it will be so meshed that all of the larger institutions, they'll have less risky ways to generate yield because of DeFi. And when I say less risky, I mean less existential risky things. And so they could engage in DeFi without the worry of crashing the economy, if that makes sense.
Mm-hmm. Yeah, and we're here to help you guys ride that wave.
Well, let's do it, man. Let's do it. Pretty soon, we'll have in-person content for you guys. And when I say in-person, you're in DC, so we'll have to set that up for all in person.
You have to come visit again, man. You and Antoinette.
Yeah, I'm down.
Yeah.
That'd be fun. Yeah.
Yeah, we do an in-person podcast with all three of us. Oh, that'd be fire. Yeah.
That'd be dope.
So got some good stuff coming, guys.
So with that, we're going to conclude this video. I feel like 2024 is going to be a great year. Always want to take into account risk management, do your research. Like, this is the time to be doubling down. So if you got value from this video, we ask that you subscribe, not just to the Know It Owls channel, but also subscribe to Crypto Know. I just hit 1,000 subs today. Subscribe to Jay Mention as well. He's going to be putting out more content here in the near future. And yeah, if you got value, drop a comment, drop a like, share with a friend. Let us know what topics or sectors or whatever you want us to cover in our next video. But until then, we'll see y'all next time.